Folks, I'm going to tell you 5 quick facts about black bull markets. Now, did you know, number 1, they're New Zealand FMA regulated. Number 2, did you know they have a copy trading service where you can either be a signal provider or copy signals? And number 3, did you know they've got over 26,000 tradable assets, including Forex, crypto, stocks, indices, and even more? And number 4, did you know they offer 500 to 1 leverage? And number 5, if you open up an account today and trade 1 lot a month, they're going to give you TradingView Pro for free. Check them out, Black Bull Markets.
Good morning, everyone.
Morning.
You guys are doing well? Get plugged in here.
Top of the morning.
All right. Happy hump day. Happy Wednesday. Good to have you guys on this morning. Got quite a lot to go over. If you guys are new, welcome, welcome, welcome. I'll give it a few minutes to let people trickle on in here. Have a lot of value for you guys today. Those of you who have been on these streams before, you guys should know a lot of this stuff plays out. Definitely recommend following along, not necessarily taking them as signals because they're not signals. This is all just analysis, our directional bias, just to kind of help you with potential setups throughout the week.
Yeah, you definitely follow along Smart Money Sundays as well on our own YouTube channel. Just go back and watch this Sunday's episode and see how things played out. Right, it's literally free value. Every single week. It's a great way to prepare for the markets, while they're closed on Sunday, so that you're prepared, have expectations and a narrative kind of set for the week. So check that out. Nate will drop our own YouTube in the chat. Good.
Yeah, there's really no link to it. You can just search Ariel Fx on YouTube, pops right up.
Yep.
And of course, all of these live streams are recorded. So if you guys hop in late or, are unable to make any future lives, then just head over to YouTube, just type in Trading Nut, Ariel Fx. It'll pop right up with the recording of these lives. I will be saying that there is no live session this Saturday. I have a wedding to go to, but I probably will extend another week. Usually we like to cap it at 4 weeks on, 4 weeks off for live streams. Because I missed 2 weeks ago and I'm going to be missing this week as well. I'll probably extended another week to have another Saturday live session in 2 Saturdays from now. So we'll do that. All right, where are you guys from? Drop your location in the chat. Drop any pairs you guys are looking at, maybe any trades that you were taking this week, maybe last week. We'll just see where you guys are at.
Finally got some volatility, some news events. Markets have been pretty dead recently. Joining your services soon. My account will be unfrozen and my cash will be accessible. Pray for me. Yeah, we can definitely pray for you, bro. We got Texas in the house, Rwanda, Germany, Guten Morgen.
Just a quick update with funded account management. We mean, our spots go so fast. We opened up my funded FX a few days ago. Everything's already booked up. That's closed. We have my next step funded available. I have about 15 spots remaining. They go quick, guys. So if you are interested in us managing your funded account and passing your challenge for you, then definitely reach out even right now. You can message us at Ariel Fx Trading on Telegram, or you send me a message on Discord. They're going to go quick. And once they're filled, it's going to be very difficult to open new spots up. So this is really it. Already starting to see a lot of payouts come in. So very excited about that. Very happy for everyone. It's really, really great. See South Africa, Uganda, Nigeria, Germany, Rwanda. Awesome, guys. We'll start in 2 minutes. Wait till 10 after.
Africa in the house.
Yeah, AUD NZD was awesome. We'll go over that today. Got Kenya in the house. Got 2 people from Kenya. Nice. Ghana, Nigeria, AUD USD. I personally don't have anything on that. Aiden might be talking about it today. I'll actually have him go and start.
AU, no, unfortunately, I don't really have anything, guys. We've already taken out the low that we've been targeting for quite some time.
Got Manchester. What's going on, Mark? Good to have you on. All right, it is 10 after. We'll go ahead and get started. We'll switch it up a little bit today. I'll have Aiden start, go over his pairs first, since I don't really give him a lot of time, since I take up the majority of the time anyways. So I'll have him start, and then I'll finish up.
Sweet. All righty. No. You see my screen?
No. There we go.
Let me know when. All right, guys. So you all know that I typically like to trade the majors, and Nate likes to trade the exotics, the crosses for the most part. And so starting off here, I always like to start on Euro USD. It's my favorite pair. And on EU, this is one that I called on Smart Money Sundays. And like I mentioned at the beginning of the stream, if you guys don't follow us on YouTube or subscribe to us on YouTube, it's at, well, it's not even at, right, Nate? It's Ariel FX, just straight up. And so make sure you guys tune into that every single Sunday for the most part. I'm dropping my analysis, my kind of higher time frame bias and narrative for the week ahead every single Sunday. It's literally 15, 20 minutes. And I do know that it helps a lot of people kind of prepare and get their mindset right and expectations for the week ahead. So on Smart Money Sundays, this past Sunday, what I talked about was first and foremost on the higher timeframes here on Euro USD. We're obviously still in an uptrend, higher time frame, right? We have the higher low, we have the higher high. We did take a trade off of this last point of return, which is what we like to call it. And we go in depth on that within our courses, Smart Money course. But we did react and maintain market structure, created a higher low and a new higher high on the higher time frames. All right, and so now as of late, we've kind of just been retracing and trickling on down, which is natural after we do create that higher high in the market. We tend to then discount ourselves, right, for another extension back up to the upside. And we do have relative equal highs up here. And so I personally don't think that this is a high in the market, especially after an enduring expansion to the upside. I do still think that there's some potential room for another leg, at least to the upside. But for the here and now, what I did talk about on Smart Money Sunday, since we are trickling down into discounted price, what I did notice on the higher time frame is that we have a nice previous gap, right? And I often talk about gaps like this. They often provide that sensitivity, and they magnetize price back down to fill in that gap eventually, right? Gaps don't have to be filled immediately. That's kind of a fallacy within a lot of, especially retail traders, think that gaps need to be filled immediately. That's certainly not the case. Eventually, when structure or when momentum pushes it back in that direction, we often do fill in that gap, and we see a sensitive reaction from that level. All right, and so on Sunday, what I talked about was simply looking to run Friday's high. This was the high from Friday, right? Just go back to the video and listen to me say it. I wanted to see that Friday high run, and then I figured we would spill over from there, and that's exactly what we did. All right, and so there's really nothing for the here and now on EU, right? It's just again, it's just kind of trickling down. The opportunity was had Monday morning as we ran out Friday's high, right? Oftentimes on Sunday, Monday, we see either a run on Friday's high or a run on Friday's low, and then that reversal, right, to kind of start the week. All right, and so I do want to see price get down into this 1.068 threshold, right? So where we had this kind of our flip zone. Again, this is where our gap is on the daily time frame. This would be that kind of discounted demand where I would then start looking for accumulation here to buy Euro USD for another leg, right? Just trusting this market structure, the higher high and the higher low sequence until it breaks, right? So we are bullish until we take out this low on the higher time frames, right? So keep that in mind. We are discounting ourselves. We're not ready yet. We need some more volatility. But once we do get down into these levels, I will be looking for potential long opportunities. Let's see. GBP USD. Again, the majors have all had a kind of similar theme. We've just been chopping kind of slow. So I've been sitting on my hands for the most part as a majors trader. But what I did talk about also on Smart Money Sundays, we do have ascending liquidity here, right? We have these kind of trend line liquidity that was never taken out, as well as this previous low. And we did have an area of demand on a 30-minute time frame that price never did trade into. Right. And so my thought process was, okay, we have a lot of sell side liquidity here. Now that we did run out equal highs, and I'll go over to the left here to show you, right, you'll notice that we had this previous high here. This previous high, price traded up into it here, into this line, right? We traded into it, created those equal highs, engineering that liquidity above those highs to get run out. Sure enough, that's what we did. Right, full body candlestick closing into that pool of liquidity. We love to see that, guys. We love to see the full body candlesticks that run out, preferably equal highs, preferably engineered equal highs, perfectly equal highs, but as well as singular wick highs. Right, the full body candlestick, right, that closes into that pool of liquidity is often that kind of sponsor candle that we talk about, where we then see price railroad and engulf the following price action. All right, and so we did have that liquidity run, hence why we're seeing that overall push back down to the downside. Once one objective is met, they then switch and fixate on the next. So once buy side liquidity objective is met, they then switch to sell side liquidity. And sure enough, we had equal lows here, and we have this ascending liquidity within the trend line. We have the previous low, and we have the previous area of demand on the 30-minute time frame. So that's where I believe that we're heading at the moment. With that liquidation to the sell side before we potentially see another push higher. I do have a potential hedge position as well on the 45-minute time frame. Kind of should we retrace now? We have a nice flip zone, and I believe I talked about this last live session, if not on Smart Money Sundays. But the 45-minute here, if we do get that push higher now, that's a nice potential hedge. Just given the fact that we've run out equal highs now. I think it's viable that we have some sort of buy to sell scenario here and start creating lower lows and lower highs, right? And having that overall higher time frame retracement as we have been extending to the upside quite rapidly. All right, so that level comes in and around 1.2570 there on GU. All right, so let's see if we get that. I think someone mentioned AUD USD. Like I said, I don't really have anything on this one anymore now, just given the fact that we've run out our flat lows. And these flat lows I've been talking about running out for quite some time. Right? This was just simply not a low in the market as we've been pushing lower for quite some time, right? Since February there. Right. And again, we had that similar situation, right? We just kept running the highs and expanding this kind of range, right, in terms of a retracement. And then we had those relative equal highs, full body candlestick, like I talked about on GBP USD, full body candlestick closes into that pool of liquidity, and we have that reversal, right? That immediate reaction engulfing that prior full body candlestick. We have that repricing event that Nate likes to talk about, and then we expanded back to the downside, right? So again, one liquidity objective is met, they immediately flip to the next liquidity objective on the sell side, right? Hence why we've now taken out this previous low, and we've now taken out this previous low, right? So for the here and now, I'm kind of just sitting on my hands. I don't want to be a seller below old lows, right? We really like to be a seller above old highs, or at least in premium, right? Or equilibrium pricing. So perhaps maybe we get some sort of accumulation here, and we get a kind of counter trend, half risk type of opportunity now that we've taken out the lows, but I'm not seeing anything indicative of that shift just yet, right? We can't just jump the gun because we've run out the low. Doesn't mean we can just buy it immediately. We could very easily continue to make, intraday lower lows and then see that break and a potential counter trend opportunity there. So nothing for the here and now. Congrats if you caught sells to the downside. USD CAD. USD CAD is interesting on the higher time frames. We do have a bunch of nice clean lows that I'm looking to target, right? And this one is kind of just stuck, right? From the higher time frame perspective, we created this high, we created this potential higher low. We haven't created a higher high on the higher time frames, but we also haven't created a lower low. So we're kind of range bound here on the higher time frame. But for a long time, Nate and I have been talking about 1.32100 as an overall objective that I think USD CAD needs to tap into as a previous market structure, right? Where we had this last kind of down close, right? Reacting off of potential supply within this wick, right? So reaction, failure to create a lower low, created that higher low, and we expanded. Massive expansion here. So I do think we need to fill in some of this price action, right? Especially this daily candlestick that engulfed 1, 2, 3, 4 days of bearish price action, right? That's an inefficient move. I do think the market can fill that in, potentially come into 1.3100, 1.3050 as a higher time frame objective. Not to mention we have very clean equal lows here resting right prior to this down close here on the higher time frames. So for the here and now, what I am expecting, especially given the fact that you'll remember a few weeks ago, we did call out this level at 1.3620. I believe on a live session. If not, we certainly call it out to our VIP group as well as our funded traders clubs. This was a classic type 2 manipulation that we talk about in our Smart Money Supply and Demand crash course, right? Where we like to see initially sell side liquidity run, right? So sell side, then buy side, and then we engulf, right? Full body closure, we engulf, we break back to the downside. Then we like to kind of take it off the mean threshold here of the up close, right? And so for this one, we just kind of rounded it off to 1.3620. Got that really, really nice reaction to the downside. We haven't taken out this low yet. We've created relative equal lows, right? Flat lows here. We are retracing now. Created this initial high, I believe is inducing liquidity to be run, right? If we have that final kind of buy to sell into our area of repricing here, 1.35785, 1.3580 is going to be my area of interest. You'll see that kind of 1 hour, that last pause in the market before we expanded, right? And so I'm expecting that buy to sell situation here, especially if we tap into this level and then break to the downside, and that would be really clean. That would give that added confirmation to go ahead and sell this thing on down into our sell side liquidity pools and ultimately into our higher time frame objective that we just talked about. All right, so that's UCAD. Let's see, anything else on the majors? USD/JPY. UJ is creating that bullish price action. We have, I believe, inefficiency that we need to fill up here, right? So I think we have quite a bit of room to move to the upside here on this one. And you'll recall that we did take quite a few trades a couple of weeks ago, called multiple risk to reward on this opportunity, not only here, but here and here within our VIP community. We caught this massive move to the upside, and we are still maintaining bullish structure, right? We created this this low, right, mitigation train, which we also talk about in our Smart Money course. It's a very powerful concept. Right, we created that low. Then we created relative equal lows here that were run out, right? Prematurely buying, the retail traders were, right? When we created this double bottom, those guys were liquidated as always, right? And then we expanded to the upside, right? Creating that new higher high. Right, so now that we've created that higher high, I think we're due for an overall retracement, right? And if we can get down into a significant discount here at 135, we have a clean down close candle here. That last kind of down close before we had that, again, full body candlestick, inefficient pricing. We can fill that in, 135, nice institutional round number. I would certainly entertain continuations long for a new leg to the upside, creating another higher high. All right, let's see if anything else on the yen pairs or crosses that kind of I'm interested in before I hand it off to Nate, because that's more his specialty. CAD Japanese yen. This is one that, again, very similar to UJ, I think has room to go to the upside, right? I do think this up close here, this is, again, the monthly time frame. I do think this up close is going to magnetize price, and momentum should carry us into that. Now, that brings us into 104.50, right? And so until that is met, I will be looking for excuses to buy retracements, right? Just simply following the market structure, right? Higher highs, higher lows created, right? And so what I'm looking at the moment is kind of liking this 2-hour down close candle, or doji candlestick, you can call it, right? You can see that price traded into supply here, right? We traded into that supply. Pardon my terrible drawing. We had that reaction, right? And then supply broke, right? The bulls won that battle, right? And that's in this big engulfing candlestick is indicative of that, right? And so I think price does need to fill that back in, right? Come back down into that area that has now flipped into demand for that mitigation. And that brings us in and around 101. Nice, again, round number, right, for a pullback and a continuation. This is certainly not a high in the market, right? Actually equal highs, nice draw on liquidity as well, right? So especially if we can maintain that buy side liquidity pool right there, that would give me more conviction to buy intraday retracements. So that's CAD-J. A lot of the yen pairs are somewhat similar as well. Swiss franc, Japanese yen, we've created a new high as well. I do like, now that we've created the higher high, a potential retracement and draw on sell side liquidity as the next liquidity objective. And so we have a nice pool right here. We have an inefficiency, right? Again, engulfing candlestick, 30-minute, was it 30-minute? I can't remember. It's 45. Can't remember what I was looking at on Smart Money Sundays. But anyway, you can see that this is such a very clean pool of liquidity that I think needs to get run out now that we created that higher high, and fill in some of that imbalance. 152.50. I'll be looking for the continuations there to the upside. Let's see. Anything else? I think we're good from my end, Nate. AED Swiss franc. This will be the last one that I talk about. This one's actually just activated. This is one that I do like quite a lot, although it is somewhat kind of counter momentum on the higher time frame, or counter trend. I do think we have what's necessary to get that retracement at least back up into the supply here at 0.6100. And what you'll notice here is that price on the lower time frames, right? We created that final low, right? High, higher low, higher high. We had a liquidity run here, right? We ran out this previous low, and then we shifted back up to the upside. So that's manipulative. We had the final repricing before we created the higher high, and now we've been kind of chopping around. If we want to talk about law of effort, how long it took to get up to this high and how long it's taking to get back into discount, right? It's a lot longer. This is indicative of a retracement, right? And so I do think we can get that kind of 1 drive, 2 drive, 3 drive cycle into the highs, back up into our true area of supply, right? And the candlestick that I was looking to play off of was our 8-hour candlestick. I'll get rid of this, right? Nice doji candlestick in an area of demand after running out sell side liquidity, reprice, and then the bulls win the battle, create the higher high. Just simple pullback retracement into discount, and continuation for our final leg to the upside. So if you're not in this, I would simply wait for a reaction now, right? Wait for that lower time frame. We are chopping around at the moment, so we'll probably have one more run on the low, sell to buy, break of structure on the lower time frame, and that'll be that added confirmation that this level is indeed valid. We can go ahead and take that long up into 6,100. All right, so that's all I've got. Nate, I'll hand it over to you.
All righty.
Talk about those crosses and exotics. Yeah, sorry, Brian. I couldn't remember if UCAT was sent out in the Funded Traders Club or not. I thought it was. My apologies. Certainly was sent out in VIP.
All right, let's go ahead and get started. You can hear me, see me, everything's good?
Yep, gotcha.
All right. I'm going to first start off by talking about AUD NZD. So with AUD NZD, and sorry guys if my audio it cuts out every once in a while. I saw someone said that in chat. I was having problems this morning with my audio. So I do apologize in advance. I did say AUD NZD could easily be the trade of the year. That was called out verbatim on a couple live sessions from a few weeks ago. Reason for that is with just a lot of confluences on the higher time frame. Obviously, you can clearly see that we are bullish, high, low, looking for an overall higher high. All right, so we swept 2015 lows with this huge sell to buy that occurred during the COVID crash. So of course, they used COVID as an excuse to plummet price into the low to then continue higher. Swept ascending liquidity from this trend line, so retail was screwed over as they always are. Retested this trend line. Retail still thinks it's going short, and they're pleasantly surprised, well, unpleasantly surprised, I should say, when price made a move to the upside. We had that repricing as a result. So that turns from supply to demand here, and now we're looking after the higher high to come back down and mitigate that area of demand. So as of course, we created that higher high and then had that overall pullback into that level of demand, and then had the reaction long. Again, lower time frame accumulation, broke the counter trend, again, failed to generate the lower low. So obviously this is our last selling volume here, 1.05000. So that psychological level ended up creating another higher high. So what do we expect in an uptrend? Well, higher high, higher low sequence. So that is our overall level of demand that we're looking to go long from. And typically how the market works when it comes down to mitigations is that, liquidity is generally engineered prior to these levels, right? So I've been over this plenty of times before. We've created equal highs or just this whole area of liquidity, right? There's liquidity resting above each and every one of these highs. You can probably see that there's lower time frame equal highs right in here that was run. Anyways, we had a huge buy to sell. So many people think, okay, well, we had liquidity here. We had this buy to sell. Now we need to pull back and mitigate and go short, right? Well, this is where you can't just use just the general concepts by itself. You have to have a holistic perspective of the market, which is why it's really difficult to become very successful watching YouTube videos, just because that's typically what is projected, is that some people go over just the general concepts, right? They go over just basic liquidity runs. So when someone comes to the chart and they see a clear buy to sell, they automatically think, oh, okay, well, that's the mitigation point. Let's go short. Well, that's why, especially in YouTube, it's just a lot of information and not a lot of putting it all together type of videos. So that's just why it's very difficult, when you're trying to learn going through YouTube videos. That's just why it's really great to have mentors, because then you can have that holistic perspective and understand that, yes, this is a liquidity run, but this is not a valid liquidity run for a continuation short. Why? Because we created liquidity sell side and buy side prior to this higher time frame level. We took buy side first, then took sell side. So we swept everyone stops who was buying above the breakout here, and also sweeping the stop losses of everyone who was selling below the support here after the mitigation and after that higher high. So that huge buy to sell to buy, having that understanding that this is the higher time frame zone, we would never have even thought about selling from that mitigation point. That's why it's so important to understand the entirety of the market and not just look at one or two time frames. Time frame is subjective. So created that type 2 manipulation, in which we talk about in our Smart Money Supply and Demand Crash course, that really advanced course that we have, buy to sell to buy. So now that we have swept traders on either side of the market, now we can continue with the overall trend direction. We've mitigated that level on a lower time frame on the 1 hour. This is where we had that last selling volume. And guys, you hear me repeating myself time and time again, because that's what trading is all about. It's about repeating the same setup every single solitary day. Well, maybe not every day, unless there's a setup, right? Of course, if there's no setup, we don't trade. But you always hear me say liquidity. You always hear me say structure. You always hear me say supply and demand flip. You always hear me say, imbalances. You always hear me say repricing events, because it's the same thing. We're just looking for new setups. So the very same thing, right? Last selling volume that failed to generate the lower low, counter trend. It's what I say all the time: low, high, low, high, low, high, failed, higher, high. So this becomes our area of demand. So moving to the right, what we'll see here is we engineered liquidity prior to that level. 1, 2, 3 touches. We came into that level very beautifully, sort of accumulated lower time frame, and now we're expanding very strongly from it. So the reason why, of course, we had 2 entries is not because it's 2 separate trades. Well, in a sense it is. We're just using half risk on each for risk to reward purposes. Because if I just place this trade here with stops below the overall low, which is the appropriate stop loss, you would only have a 1 to 6, which in all reality is not bad, but this is a swing trade to the upside. So this will probably take a few weeks to a few months, just depending on how slow or fast the market moves. But if we split it up half and half, we can place both entries at the same point. One stop loss would go below the overall low, and then the other stop loss would go below this area of demand, just in case we have the reaction from the demand and don't take out the demand low, right? So that's why we have that there, and then we can increase our risk to reward as a result. So what gave me more conviction on this trade was the fact that not only did we create this ascending liquidity trend line, 1 touch, 2 touch, we extended out 3rd touch. So obviously retail was buying in here and they got stopped out. Then once price broke, they looked to sell it upon the retest of the trend line. So they sold it, we bought it, they lost, we win. It happens all the time, right? Retail never wins. So continuations to the upside are expected. I don't have anything in regards to new setups. However, if you are ever going to be trading AUD NZD in the near future, or anytime in, probably between now and the end of the year, it's probably going to be a long opportunity, just because we have mitigated every single point of demand. I don't see any area in which price could come into at this point sell side. I just think the only direction price can go is long. What does that not mean? That does not mean that you should just open up your MT4 and place a buy order. That would be the most stupid, idiocracy, so stupid, right? I can't even get my words out how dumb that is, right? I say this all the time. It is so important not only to use good risk management, but have good psychology, right? Do the little things correct, right? Understanding that if you get in here, where's your stop loss going to go? It has to go below here. Is that risk to reward going to be good enough? Absolutely not. Right? It's those tiny things that continue to screw traders over, and then they wonder why they're still losing, right? So how can we get back into this market? Well, we have to understand that revenge trading, well, not necessarily revenge trading, but FOMO is what kills traders. So entering right here would not be smart. Now, what would we like to look for? Well, of course, we want to be buying at discount, selling at premium. So discount from here to here would probably be anywhere between here and here, right? So, I mean, it's tough because yes, we have a huge imbalance. We could come back down and then just continue long. However, I would like to look for some sort of lower time frame liquidity sort of setup, right? This is what we look for all the time. Some sort of, obviously with structure, we're now bullish. I wouldn't like to see price come below this low, not to say that it can't. I mean, we are still bullish until we take out this previous low. So technically, yes, we could come back down and sweep it and then run higher. That's a possibility. However, I would not like to see that, but I wouldn't be placing a buy limit from that level just because, this is a very strong move. We could run sell side before running buy side again. We haven't really broken structure yet. I would just wait to see some sort of, liquidity run, maybe some sort of buy to sell to buy. That would really be great. Create and engineer liquidity just like we did over here. Maybe fill in some sort of imbalance, take out maybe buy side first, then sell side, then break the counter trend, pull back to mitigate, and then go long. So that sort of setup is what I would look for, or just some sort of equal low, sell to buy, higher high, pull back long, right? Something like that. And if we don't get it, then we sit on our hands, just like Aiden said. We're going to be very patient. We don't need to be in a trade every single day of every single week, right? More trades does not mean more profit. All right, so that's AUD, NZD. NZD CAD. So I had a beautiful, multiple setups from this level. I think we've had over the past, since mid-March, we've had 1, 2, 3, 4, 5 trades on NZD CAD that are in profit. I think we've had maybe a few that lost. I think there was one right in here on a lower time frame that we came into and then we never followed through because we were just trading with the lower time frame until it broke, which at this point it ended up pulling back higher time frame. So that's where we lost 1 or 2. But you can see the risk to rewards on these are absolutely ginormous. 1 to 8, 1 to 5, 1 to 15, 1 to 12, almost 1 to 13. This is a 1 to 8.6, and we're looking to get it again. So even just one pair, this is just since March of this year. So 3 months could easily be all you need for the rest of the year, right? And this is a huge risk to rewards. This is why over leveraging is unnecessary. Revenge trading is unnecessary. FOMO is completely unnecessary, right? You can make a very good living off of trading. And you'll realize that once you start implementing the habits of professional traders, sitting on your hands, not necessarily having to be in a trade every single day. Because if you're wanting to be in a trade every single day, I would say probably the average risk to reward for what we're looking at is probably around a 1 to 5. So getting in a trade every day at a 1 to 5, 5% times however many trading days there are, 200 and something. It's just ridiculous. You don't need to make that much money. Hedge funds, billion-dollar hedge funds make about 15 to 20% per year, but everyone is wanting 15 to 20% a month. It's just because of the mindset that people have. They want instant gratification, and that's why 99% of the world is living paycheck to paycheck, probably. That's why the 1% are where they are. And it happens for a reason, right? It's all about mindset. It has nothing to do with your inability to learn trading. Anyone can learn how to trade. It's all in your mind at the end of the day, right? Trading for the long term. So anyways, we pulled back into our 2 levels of supply, right? After we had the mitigation from our higher time frame supply, lower low, lower high, lower low. So what do we naturally expect? Lower high. So where's our last buying volume? Well, we had a liquidity run here, buy to sell into a level of supply that we're looking for. So we had 2 levels of supply here, one on a lower time frame and then one of this last buying volume, because obviously we can see with the counter trend. Boom, boom. That was our last buying volume before the structure was broken. So we came up into both of those levels. And what was interesting to me, and this is really what gave me more conviction that price was going to go short, was because we created this channel. 1, 2, 3, 4 touches sell side. 1, 2, 3, 4, 5 touches buy side. We broke the channel. We retested the channel. So of course, this screams retail. And no wonder why price fell, right? So we came into both of those levels, failed to generate the higher high, instead making a lower low. So that's, another thing that you guys can start implementing into your trading is, if you don't know, if let's just say you have a reaction from your level, but you haven't broken structure immediately. To get back into the market, you don't necessarily need to just be trading off of the supply. I mean, you can, maybe on lower risk, but what you should be waiting for, what would give you more of a highly probable setup, would be that failure to generate that higher high and then the clear shift in structure. Now you know that this isn't just, some sort of continuation. This is a failure to generate the higher high off of the level of interest that you traded from. The lower low, now it's confirmed. Now you can be looking for pullbacks to short. And that's exactly what we did here. So where's our last buying volume? I mean, same terminology every single solitary day. High, low, high, low, high, low, high, low, failed, lower low, supply. It's so simple. It doesn't need to be difficult, right? It's just maintaining good psychology and following your trading plan and waiting for your rules to be met and your confluences to be there for every single trade and just being patient, right? So we engineered liquidity here. It's all just engineered liquidity. We run it. People think it's a breakout of this little consolidation block. Oh, let me buy it up on the breakout. And now they lost. Margin call for the traders. So mitigation of that level, what do we do again? Lower low, lower high, lower low, lower high, lower low. So what do we naturally expect? Lower high for a lower low again. We're below the 1 hour 50 EMA. We are below the 4 hour 50 EMA, and our level of supply here lines up with that 50 EMA. So if we get a retracement, I'm not sure if we'll have this big of a retracement, but what we can see is the fact that this was an area of demand, higher high, higher low. We had the reaction off of the demand, failed to generate the higher high, made that lower low. So now this turns or flips from demand to supply. We should be looking for pullbacks up into that level for continuation short, because we are in an overall bearish market, at least short term. Even though you can clearly see, we're bullish. I want to get down into lower prices. Why 0.8? Well, psychological level, obviously, but just from a higher time frame perspective, just implementing the same sort of things we're implementing in the lower time frame. When we talk about premium and discount, that doesn't just apply to the lower time frames, it applies to the higher time frames as well. So if we're bearish on the lower time frames, where do we look to target on the higher time frames? Well, areas of demand. It depends on if we're bullish or bearish. In this case, if we're bearish, we could easily make a lower low. If we're bullish, then we need to be waiting for discounted price to then continue to long it, right? So, short term we're bearish, right? And long term, we don't know. Higher time frame, yeah, I guess you can consider us bearish, but we also had a huge move to the upside, and this looks very corrective, so we could go long. But either way, even if we are to go long, we probably should come back down into discount first, 0.8 most likely, before continuing long. So short-term bearish, all signs are pointing to sells at this current time. So definitely looking for retracements to continue to short. Oftentimes when we have this huge move like this, because we had news last night, and of course news is not random, it was used as the excuse to move price in the direction it was always meant to go anyways. What do you know? So anyways, huge imbalance here. Oftentimes we don't really just pull back and fill it and then go short. That would be great. However, what will most likely happen if we do get some sort of pullback is something like this, right? Creating and engineering liquidity to go and run and then make the real move. Either way, this is the level of supply I'm looking for. Whether it does this or whether it just pulls back and goes short. Either way, I'm not going to get enticed by all the lower time frame noise that occurs in here potentially, because I know that this is the valid level of interest. Okay, so that's that supply level I will be looking for. It's quite a ways away, so nothing at this current time. NZDJPY, we're looking for overall continuation to the upside, as Aiden mentioned on, I believe he talked about CADJ and EJ. He's looking for longs, higher time frame. Same thing with NZDJPY, and this can be adjusted. I want price to come back up into these levels here. These can be adjusted. But anyways, so you can see that we are in a bullish market, higher time frame bullish. We have a higher time frame objective here, around 89, potentially 90. I think that we can come higher. So continuing with that overall trend of the market, 4 hour time frame, we swept equal lows in here, but also this higher time frame low here with this wick. And most importantly, we broke the counter trend. So even if we were bearish, low, high, low, we're not bullish. We've made a higher high. So signs are pointing to the upside for me. If we follow the lower time frame structure, high, low, high, looking for an overall retracement for continuations. 1 drive, 2 drive, 3 drives, most highly probable drive, right? So same thing as to what I was looking for on, or what I talked about on NZD CAD, where we could be engineering liquidity prior to sweeping it into the level. Same thing with NZD JPY, right? This is why I'm not worried about price not coming into my 2 levels of interest immediately, because what it could be is engineering liquidity. Maybe that third touch of the trend line, retail starts to buy, trend line liquidity, we sweep it into our levels and go long. That's used as the excuse, right? Used as that buildup of liquidity in order to sweep it, free it up to then continue. So where are our levels? Well, we talked about this plenty of times before. After we swept liquidity here, we broke the counter trend, right? Low, high, low, high, low, higher high. Where was that last selling volume? Well, this is the last supply level before we shifted. So we came up into that level here, had the reaction, failed, higher high. That turns into demand. So even if you didn't take it off that level specifically over here, you would have known that after we had the reaction from it, we broke the structure again. We broke the counter trend. So this was the expansion. This was the pullback. This is the expansion now. So where do we always look when we have the expansion? The pullback, right? So we have a low, a high, a low, a high. This is our last point of supply. We failed to generate that lower low, had the reaction, made a higher high, so that will flip to demand. We also have another level right in here because this was a reaction off of our last buying volume before the structure shifted to the upside. So 2 levels of demand there, and we can see that we didn't come into either of them, which is okay. Looking for overall pullbacks into these 2 zones. These are still valid for continuations long into our higher time frame objective in and around that 89 level. NZD USD. NZD USD is interesting. I think we're probably going to continue short, to be honest with you, just because dollar is extremely bullish right now. Even though we have created really good equal highs, we still are counter trend bearish, and dollar is very strong. What I did like was the fact that when we came back down in here, when we accumulated, we did not make a lower low. We actually came into a lower time frame level of demand, had the reaction, and made a higher high and created buy-side liquidity. So I thought, okay, well, this could be 1 drive, 2 drives, and potentially 1 more third drive into our supply level right here, right? So what I was looking for originally was when we broke the counter trend to the upside this way, we broke this counter trend, we had our repricing that came into previous supply that failed to make the lower low within the counter trend structure. And instead we made the higher high. So that was that flip from supply to demand. I was hoping to get that mitigation and we didn't do it. So I thought, okay, well, on the higher time frame, we ended up creating that higher high and we never ended up taking buy side liquidity. So I thought with any pullback, we should likely continue long. So I held this level here in a little bit of drawdown at the moment. No worries at all. If I lose, I lose. I don't really care. So gonna continue to hold this, and there's nothing really new on that at the moment. You already talked about GU, GBP Swiss franc. I'll mention very briefly. Talked about these 2 levels plenty of times before. I'm not going to repeat myself. Overall, we are extremely bullish. We've come down into a mitigation point, so a sponsored move, which was the result of this huge liquidity run that we had back in March. So huge sell to buy. We had a repricing on a lower time frame, and that's why we came into this level and mitigated that very nicely and accumulated. So the counter trend was broken, this last buying volume, right? Had the reaction, failed, higher high. Turns into demand, had a beautiful trade from that level a few weeks ago. So we're looking to buy again. Again, the same sort of deal, last buying volume, counter trend. We came into it, failed to generate the lower low, instead stopped, made the higher high. That turns into demand. Following the same exact setups every single solitary time. Had the reaction, didn't get the follow through right away, never broke the high, so continued to hold both of these trades. It didn't move stop to break even yet. Stops are below where we had that manipulation lower off of the channel break on a lower time frame. You see that wick, a huge sell to buy. Stops are below that low that came into another level of mitigation. So anyways, in both of these trades at this current time, we have equal highs here. That's not equal highs. I was looking to show the fact that we ran buy side first and then sell side and then hopefully buy side because we bought it from these levels. That would be that fulfillment of the type 2 manipulation, buy to sell to buy. So anyways, just taking a little bit longer than expected, but not to worry. Stops are still where they are because we're still in a counter trend downtrend, right? At least lower time frame. So could we have 1 more push to the downside before going long? Potentially. I have no idea. I will only put stops to break even once we have broken to the upside. So just looking for continuations there. Euro USD talked about, Euro JPY talked about a few times. Really, the same thing applies on EJ as it does with Chef J. We have higher time frame levels of demand. I talked about this on, I think, last Saturday's live session. So definitely stay tuned to those. If you can make any live session, I would make the Saturday live session just because we go over all the pairs. I try to limit the amount of pairs I go over on Wednesday here, just because I just don't like repeating myself with the same analysis as I had the prior weekend. Anyways, higher time frame levels of supply we're still looking for, but we can continue to follow the lower time frame if it continues, right? Follow the trend until it breaks. So of course we have this head and shoulders that was faked out. Fake out, continuation. So we had that fake out here. Fake out here, push up, reprice, failed to make the lower low, higher high. We actually have engineered liquidity right there. So I would like to see price come back down into that level of demand to go long. Same sort of deal with Chef J. Right, we have our higher time frame levels down in here because this is the higher time frame structure. This is the lower time frame structure. So we follow the lower time frame until it breaks. If it does, then we trade with the higher time frame. So same deal here, lower time frame. Head and shoulders, fake out. Equal lows were run, sell to buy. Came back down into this initial level to begin with. Called that out, but I also said when we closed here on Friday, May 5th, that we could run the previous week's low, which is that Friday low, come deeper into this demand, and that's exactly what happened. We rolled over, came back down, swept the low into that 1 hour imbalance, had the reaction, counter trend, low, high, failed, higher high. This turns into demand. So now that we have made the higher high now, what do we naturally expect? Some sort of higher low. So where's the range between this low and this high here? So clear sell side liquidity, clear bullish higher time frame uptrend, counter trend broke, demand, discounted price, building confluence for continuations. And if you want to include correlation, all the XXXJPY pairs are looking very bullish at the moment. All right. Talked about AJ already. Euro AUD. I'll quickly go over. I think that we might have one more push to the downside. However, I would like to take this on half risk, if any, just because we are extremely bullish. Price is extremely bullish and we have equal highs. So this is not a situation in which you would like to trade this on full risk at all. We're being capped by the daily 50 EMA. We could easily continue long. If this does not go short and this goes long, I am telling you right now, I did not say that I am looking to 100% sell this. Do not put words in my mouth as people oftentimes do. All right. I will say that I will be looking for counter trend opportunities because we have areas of demand that we could come into still. We haven't really fulfilled these objective points. And the fact that we have created a low, failed to make the higher high, lower low. So we could be in for one more pullback for that third drive into the low. That's a possibility, but we are extremely bullish. So please, please, please be careful. All right. We swept trendline liquidity, 1, 2, 3 touches, buy to sell, reprice, continue, demand, supply right there. And then we had 0.65, which is right here, which is pretty much this doji candle. So that additional level of supply as well. So sweeping buy side liquidity now, we'll be looking for potential shorts, but extremely low risk, if anything, because we could easily just continue to the upside. So keep an eye on that level there. Euro GBP, not sure if he mentioned this or not. I don't think he did. But 4 hour time frame, we're still counter trend bearish. We're making lower lows and lower highs. However, we did pop down into finally 8,650, which is right there with that wick. So we could be in for a higher time frame expansion to the upside, especially because we're higher time frame bullish and we have equal highs. But we could also come back down for one more drive into 0.8630 because 0.8630 is actually the complete fill of this huge imbalance in this last point of selling volume, which is that demand. So we could come lower potentially, just deeper into this accumulation. So we'll see what happens. Let me go over to the right. I will only be looking to buy this if we make a higher high, because go to the hourly. clear equal lows, 1, 2, 3, 4, 5 touches, 2 in the morning, London session open this morning, huge sell to buy. If we get that higher high break of that counter trend, then we could be looking to pull back into demand to continue long. But until then, I'm sitting on my hands because we could easily just continue with the lower time frame. We haven't reached that higher time frame objective point yet, which is why trying to take premature longs before confirmation isn't really the most highly probable. All right, so even though we have this huge sell to buy, that would be the mitigation around 8672. I want to see that counter trend break. I want to see the clear momentum shift, and then potentially this level of demand, and then maybe the actual fill of the mitigation. So either one of those two levels, that could be a possibility later on. So we'll just kind of sit in our hands for the time being, and we'll wait. But that's really all I have. Let me see if there's anything else. I don't really think so. NZD Swiss franc didn't quite get into my level that I wanted originally. We wanted these two, and you can't really see them just because it's just 4 hour and it's really best on the 1 hour, but this was the pullback, right? So when we had this liquidity run, this descending trend line, we had this huge buy to sell into a lower time frame level of supply, and then we made the lower low. Well, on a lower time frame, there was a repricing, and then there was a repricing right here. So that's why we wanted price to come up into those levels. We created equal highs, 1, 2, 3 touches of this trend line. If price just had that buy to sell, that would have been awesome, because then that would have been excuse to take buy side liquidity, mitigate our supply levels, and then go run sell side liquidity and put us in profit. However, I wouldn't say this is invalid. I still think that, if we run higher, this could be some sort of sell side liquidity run, maybe enticing premature sells because of this trend line break of structure, right? So enticing shorts, coming back up, taking buy side liquidity into our valid levels of unmitigated supply, and then rolling over. So in this case, it could be that sell to buy to sell, that sort of type 2 manipulation. But of course, that hasn't happened yet. We'll kind of just wait to see what it does. We're going to be very patient in regards to this setup. All right, so that is all I have for you guys today. Let's see. Any questions?
Got a quiet crowd again today.
What app is that? Trading View? Is that where you?
No, this is like for streaming. StreamYard.
Oh, StreamYard. Yeah, it's a really cool platform. All right. Any questions, guys, at all? Any questions about what we went over? Any questions about any, terminology we use? Anything that you guys are looking at that you're confused about? This is your time. I'll be on for another couple minutes before we hop off. Again, no live session this Saturday, but I will hold one again next Wednesday and next Saturday. That will be the last week before we take a break for a month. But it really just depends. I'm seeing that the numbers are starting to drop in terms of these live sessions. So who knows if I'll even continue. I'm only going to, this is free for you all. I'm only going to do it if people want us to do it. But since no one really seems to care about learning, who knows? As you all know, I'm very straightforward and very blunt. That's who I am. Don't take anything I say personally. Just my personality. Your analysis, you leave no room for questions. I guess that's a good thing, maybe.
You do know how to talk.
Yeah, I do. I don't know how to shut my mouth sometimes. CVP AUD, let me check it.
Yeah, we did have a big move on that one.
Yeah, we never had any follow through, Matthew, to the downside off of that supply that we were looking at. At that point, since we swept buy side liquidity now off of that prior supply level, I'm just sitting on my hands. I don't really see anything else. There's really nothing I'm looking to do with it.
The sells got up at least 1-to-1, so should have been break even if you were still in it.
Yeah, it could have been. I personally wasn't. I took a loss on that one, but it is what it is. You consider higher time frame shorts that's still valid on AU. Something that Aiden would probably answer.
What's the question? Yeah, I mean, you got to follow the trend and the overall structure until it breaks, right? Getting into the habit of trying to guess when a trend is going to break and, try to catch tops or bottoms isn't going to play out in your favor in the long run. It's really just better to follow it until it breaks. You're ultimately going to take a loss, but all the wins that you get as you trade with that structure, it's going to far exceed that loss you experience when trend finally shifts. So yeah, I mean, AU I think can at least has some more significant room to the downside, at least into 6,450. So yeah, nothing wrong with continuing to look to sell retracements. Simple as that.
You think it might be a false break and then go back to? I mean, I have no idea, Matt. Potentially. And I just don't see anything new on it at the moment. So here's another like learning lesson for you all here. I'm glad, Matt. I'm glad you brought that up because I will go off of what you said here. Can you guys? Aiden, can you see this?
Yeah.
Okay, cool. So at GA, remember we were looking for this repricing event area of supply, and we had that initial reaction very beautifully, right? So we got into that. I mean, I guess you could have, at this point, when we failed to generate the higher high, we made the lower low below this counter trend low here. Well, not really counter trend, really with the overall trend, but you know what I mean, lower time frame trend. At that point, you probably could have moved stops to break even, especially because we got the wick entry. I didn't. I was personally waiting for at least these lows to be run, so I didn't move it quite yet. But as we can see, we're forming more trendline liquidity here. We have equal lows. We have 1, 2, 3, 4 touches here. So yeah, we could still roll over. We haven't come back down into demand yet. However, we are extremely bullish. So we just have to keep that in the back of our mind. Trend could easily just continue. And liquidity doesn't have to be run immediately. It can be left there for later objective, right? So we just have to kind of trade what we see, especially because what traders will do is, and this is really where smart money traders can still go wrong, is, and this just comes with experience as well, is they'll look at this and they'll say, okay, well, I wanted price to short, that confirmation bias, right? You originally had the short bias, which we did, and we had lows, and then you would say, oh, okay, well, we swept this previous high. Oh, now I should be looking at short because I still need price to go take these lows out. Price has to go sweep that liquidity. No, it doesn't. It doesn't have to do anything. So at this point, I don't see anything new. Now, if we go like this, if we like maybe fail to generate the higher high and have an expansion, then we could be in for a potential retracement back down. I would need to see more conviction and a better setup for me to be looking for sells into the liquidity. It's just not as highly probable. If it does it, cool. If it doesn't, oh well. Like you have to just take losses and move on. Just because we take one loss and it hasn't swept liquidity doesn't mean we should just take a short again in hopes that it's going to finally go run it now. So it could be a false break. Who knows? I would just need to be patient and wait. What if price just goes like that? Well, then we just sit in our hands and we don't do anything. If price, goes like this, that'd be kind of cool. Maybe we mitigate some lower time frame level of supply here. We sweep liquidity there, buy to sell. Maybe we tap into this trend line again, mitigation of the supply. That would be a great opportunity to short because we have still conviction to the downside, but only if something like this occurs, right? We just have to sit in our hands and just wait for every single confluence that we need. Every trade needs to be taken.
Yeah, I mean, end of the day, this GPAUD is certainly bullish, and conversely, AUD/USD is bearish, like I was just talking about on the higher time frames. We still have room to go to the downside there on AU. So GU will follow suit in the opposite direction, or excuse me, GA.
right. Any other questions, guys? Anything else you have? I've been watching a lot of videos on YouTube and not been able to start for fear of losing money. Well, you don't have to go live right away. You're going to start with a demo. Build a track record, right? Find consistency. Trading takes years of experience. It doesn't matter who you join and what group you join, what video you watch. Could be the worst trader in the world or the best trader in the world that you learn from. It's still going to require experience for you to become successful. And that's where I think a lot of people go wrong, is that they think that someone else is going to help them make money. No one's going to make you money except for you. And it just takes experience for you to understand that. It took me 18 months. Some people it takes longer. There is no secret sauce. There is no secret YouTube video out there. There is no secret course. There is no secret strategy. There is no secret anything. Just because it doesn't work for you right away doesn't mean it doesn't work, right? Just because experience hasn't set its course, and that's just what you need. So in regards to your question, or not really your question, but just what you said, I would recommend starting on demo, or maybe even a very small live account, $100, $200 live account that you don't care to lose. Right, and just start practicing the right habits. Practice good risk management. Obviously, if you open up $100 account, risking 1%, well, you probably need a few $100s to make sure it's good risk management. Just because on a $100 account with a 50 pip stop loss and a 25 pip stop loss, you're probably still risking 0.01. Right, but you get what I mean. Like not focusing on the money aspect, and just focusing on practicing the right habits, good risk management. Learning the strategy, focusing on the process, and everything like that. And then building consistency, right? Attaching maybe a MyFX book to your account and just trading for a good 6 to 12 months, right? There's no need to rush it, because those who rush it and want to make money right away, those are the people who are always stuck in that loop of losing. I've had people come to me saying, I've been failing for 5 years. Well, why? There must be something you're doing wrong, but why aren't you fixing it? It's because they can't get out of their own way. So you don't necessarily need to go live right away. Start with a demo, maybe a very small live account that you don't care to lose, and then just practice. Practice, practice, practice.
Well, and the reality of the situation is, also from a psychological standpoint, in order to be a successful trader, you can't have any emotions, right? Whether that be greed or fear, the opposite. I mean, clearly it sounds like you have fear right now, and so you would not be successful operating in a state of fear, right? Scared money doesn't make money. You have to be willing to take that risk, right? Calculated risk, right? And stack your probabilities in your favor, and then you shouldn't have any fear, right? We don't fear losing here. We embrace losing. We accept the fact that we're going to lose. We're not fearful of losing, because we understand and we trust in our system in the long run that it's profitable, and that it's that it works on a consistent basis, right? When you step back and look at it from a longer term perspective. So you can't start off trading in a state of fear. You can't start off, and a lot of people do start off in a state of greed, right? So that's the opposite end of the spectrum. You have to be able to balance your emotions. You have to be able to get rid of the emotions and be objective with your trading and rules based as opposed to emotion based. Not a lot of people can do that.
But it all just comes down to experience. I mean, it's something that you truly have to just experience yourself. Because I've asked the same questions before. A lot of questions you guys are asking me, I've asked before to my mentor, to people when I first started. And they've given me answers, and I understood those answers. However, I was still reverting back to my old ways, because I thought that I could do it my own way, or, I will figure it out eventually. Experience is really the true teacher. And just because you're failing right now doesn't mean that you're doing something wrong necessarily. It just comes with the learning process. Yep. How long did you guys backtest and demo trade before going live consistently? As long as it takes. But there's no, I'm not going to answer that question because a lot of people ask me the question of how long. Everyone is different. Some people learn at different paces. Some like to do different things in regards to their learning. Some people hate journaling. Some people love it. Some people hate backtesting. Some people love it. You know, there's no golden answer to how long, right? It's how long. The answer truly is however long it takes, right? If you're not seeing consistency while you're backtesting and demoing, keep doing it, right? You just got to keep going. So if I say 6 months, then that naturally subconsciously ingrains in your brain that, oh, after 6 months, I can then probably go live now. What if it's 12 months? Subconsciously, you take in this information and then you'll realize, oh, 12 months has gone by. Oh, I now should start transitioning into live because Nate said that it takes about 12 months. That's why I'm not going to answer it because, I mean, I know how long it takes me, how long it took me, but it's not going to help you. I would just say continue to do it until you find consistency. Continue to backtest and demo until you find it. NZD Chef 56196. Possibility. NZD Chef. So remember that many people would probably, you know, back when I first started trading, I probably would have said the same thing. 562, 5619, just into this level of supply. But let's take a step back and actually look at what's going on, just instead of having the tunnel vision of what's going on right here and neglecting everything over here, right? Because just because we see that broke structure, well, what is actually happening? We have 1, 2, 3, 4 touches of that trend line. So naturally, what will retail do? Break, retest, short. What else do we have? Equal highs. What else do we have? Unmitigated supply. This is the supply we haven't even come into yet. So the chances of us actually coming into this level and this actually being a valid supply level are very low. Not to say that it can't happen, but I'm not going to be placing a sell limit at that level. If we have a reaction from it, if we come into it and then break some sort of counter trend structure, then I could be looking for continuations for sure, but I won't be looking to place that sell limit because what is everyone and their mother doing? What is every single solitary retail trader doing when they look at this trend line? Oh, it broke. Oh, I need to be selling, or if not, be looking to place a fib and then sell it at the 61.8 and then go short, right? That's what they're taught to do because their mentors don't understand trading either. So that's what they're doing. So we want to do the opposite. In addition, we have equal highs. So no, I won't be looking to sell here unless we get a clear reaction, some sort of, I don't know, could be a buy to sell, could be, I don't know, could just be as easy as, you know, counter trend to the upside and another lower low reaction from the supply. And then we pull back and look to take it off the supply again. That would confirm it, right? Remember what I said before. Let's just say that, you know, if this is a real break and we're actually going to now continue short, because of all the confluences that I have to not take the trade, remember what I say, wait for the failure to make a higher high and then another lower low. That would confirm that this is a valid supply zone because another lower low would form, and then we can take it off the retracement and short it. Because at that point, the probability of us going short after all of that would be more highly probable. But because of the trend line, because of the equal highs, because of the median level of supplies, I won't be just placing sell limits, if that makes sense. Yeah, no problem at all. Awesome. Traded fingers, these indicators, real waste. Smart money has turned everything around. Yeah, smart money is awesome.
Amazing. Love to hear that.
All right, guys. Well, have a good rest of your day. I appreciate your time. Again, no live session this Saturday, but I will hold one next Wednesday and then next Saturday as well. And then we'll take a break after that. But of course, if you guys are interested in learning more about how we trade, feel free to head over to our website, arielfxtrading.com. Just book a free call with us. We'd love to just speak with you in regards to how we can best help if we can in the first place, because we're not suitable for everyone, right? And if we are suitable for you, then we would love to, think about ways in which we can work together and help you along your journey. But at the same time, we also do offer, prop firm passing and account management as well for those who are looking to add that extra stream of income to your overall portfolio of investments. Definitely is a great opportunity. We only have a limited number of spots available. We filled up 30 spots in a matter of a day, and we have one more prop firm that we're looking at. So we only have a limited number of spots there as well. So that will probably be gone in the next few days or so. So if that interests you, reach out. We'll be happy to get you set up. Anyways, have a good rest of your day, and we'll talk to you all later.
Thanks, everyone.
Take care, guys.
Cheers.